Good morning. It is Tuesday, April 23rd. Nothing crazy about a Tuesday. Nothing exciting about a Tuesday other than we had a positive day yesterday. Hey, that's news. Now, it wasn't super positive. Here's the cues. But you have two green candles. You opened at 417. You closed at 418. Nothing crazy, 0.32%, but that's a hell of a lot better than a red candle. And look at all those red candles. Afternoon, you opened at 418. You closed at 418, a 0.05. Again, we held on to gains. The RSI up slightly. You know, you went from a 23 back on Friday, and you went to a 31. MACD starting to move a little bit. Nothing crazy. We're in pre-market. We're at 420. 0.34. Can we hold on to it today? What I really want to point out is I was yesterday at about 4:30. I was sitting there and I was like, okay, market's just closed. Let me see how we traded during the day. And this is a Webull chart. I love Webull. If you don't have Webull, there's a link on my Linktree. Linktree is down below, linktr.ee/daily stock pick. You can sign up for Webull and get some free stocks. I think it's up to like 75 free stocks. I'm not sure when it changes, but again, you can sign up for Webull. I like it. What I found interesting, and we'll look at this a little bit, is during yesterday, you see, this was 4 o'clock, 4 a.m. This was the close. 1905 is the previous day. That's Friday. Monday, we opened up kind of at 413. You have this nice little gap up here. What's interesting is the bears tried to take over in the morning. We were up again. It came down. And then what happened throughout the day? The bulls showed up. Everybody said, you know what? It's earnings week. Things aren't as bad as possible. We got up to 421. And then you sold off into the close. That's a little dangerous when you're selling off into the close. But I thought it was interesting that we almost touched Friday's lows at that 5 minute. If we go back here and we look, I said, hey, the ultimate support here is at 407. If we break 407 again, then I'm extra concerned. Before we take a look at the 5 minute, let's look at the weekly, because the weekly, again, I said we're only 7% down from the all-time highs. 7%. This highlighted region right here, if we are going to continue to go down, that's 11%. So we might have still more room to go down. You have this 391. Again, 407 is your ultimate support level. We're at 418 in pre-market. We're trading at 420. I don't know what's going to happen. It's an interesting one. We have Tesla after the bell. We have a lot of things going on. The main mover this week, whether it's going to be up or down, is going to be PCE on Friday. So there's a lot of trepidation in the market. There's a lot of people who don't want to put money into the market. I've said it before. This back here in July last year, very similar setup on both RSI and the MACD. Could we be going down? I don't know. Overall, I am a bull. But I did take a look at that 5 minute in Webull. I haven't taken a look at a 5 minute yesterday, but you can see clearly yesterday with the 5 minute chart. Here is, let's see, it was April 23rd. So we're going to go all the way over here. This is yesterday. We opened up April 23rd. The 5 minute chart here. April 22nd. Okay, April 22nd right here. The open down here, 12 o'clock on the 19th. Here is the open yesterday right here. So you see that little gap up there? That's the gap open. There's the move on the Webull chart. There's the touching of the low at the close. And then there's the move. And then there's the sell-off in the afternoon. Now, we could do extended hours. I'm not going to change it. But it's something to keep an eye on. Again, if we hold it today, that's 2 days in a row where we held gains. Because, again, in pre-market, we're up. I like that. Here's a chart that Trendspider just posted yesterday. The 50-day SMA taken out. The 100 SMA taken out. The 200 SMA. Is that one next? Again, that's around that 390 something. I don't know that that's where we're going, but if we go down, that's a healthy pullback. Remember, 5% is a correction, or 5% is a pullback. 10% is a correction, and a correction comes with a move higher. So that's what you want to take a look at. You want to take a look at these things. Now, the mystery broker, Michael Santoli has a great series called The Mystery Broker. You can just look up the hashtag mystery broker and see the history of it. He came out with some new stuff yesterday. If you want to read it, go and read it. I think it's a pretty good and reliable indicator. He likes the market going forward, but he says, hey, for the next 10 years, we may be in that lost decade because valuations are extremely stretched. Now, he changes his mind like the weather. I mean, honest to God, this guy, he hasn't said anything about the 10 years until now, but he changes his mind a lot. Goldman Sachs seeks core inflation trending down in 2024 with key PCE data on deck. The PCE data is personal consumption expenditure, and the PCE inflation is the Fed's favorite. I think it's 2.7% expected this Friday. A lot of people are not trading this week. A lot of people are just sitting back. They're doing nothing. Goldman Sachs says, hey, we're going to be good on 2024. I like this move right here. Even if we were to continue down, say you go to the 4-hour right now, or let's go to the weekly again and take a look at the Qs. Even if you were to continue down, I like ending the year higher than where we are today. Presidential election, potential rate cuts. I like ending the year higher than we are today. 420 on 423. I like the year ending higher than we are today. That's why I bought $100,000 worth of Microsoft. That's why I bought a bunch of stock last week. Bitcoin. Entering long on the bullish MACD cross up and exiting on a bearish cross down has been a profitable strategy over the last 2 years. 89% return. What happened? Bitcoin just crossed over. The MACD just crossed up right on the oscillator. You can see on this chart from Trendspider, the MACD crossed up. Interesting move right there. All of this will be in the newsletter. Magnificent. I listened to a podcast yesterday. Steve Cross from Trendspider, or I'm sorry, Seeking Alpha. He's the guy who's in charge of the quantitative strategy at Seeking Alpha. All of the quant strategies you see in Seeking Alpha, Steve is in charge of that calculation that does it. Now, Steve talked yesterday about the great five, the 7 stocks: Tesla, Apple, Google, Microsoft, Amazon, Meta, and Tesla. So those 7 stocks, the Magnificent 7. He thinks Tesla and Apple are the 2 that won't perform, and it's based on the quant. It's based on valuation. He goes over everything like a master. Listen to this. It's an hour long. It's not 44 minutes. You have 44 minutes in your day. Cut me short. Go listen to this. It's a masterclass. Go sign up for Seeking Alpha Premium if you don't have it. If you use my link, you save 20%. Seeking Alpha Premium is where you get all this quant stuff. I thought it was super interesting that Steve talked about Tesla. He's not big on it, but he talked about an article that he wrote January 31st, 2024. He wrote, hey, is Toyota or Tesla better? And he basically made the argument that Toyota is a better thing. It's up 22% versus Tesla being down something like 40-some%. So we can go look at this. Let's go look, because let's do an updated chart. We'll go over here and we'll go to Tesla and we can do a charting against Toyota. And we can just do it year to date, because again, that was in January of this year. Let's look at Tesla, and we'll select the symbol. We'll get rid of the S&P, and we'll go to Toyota. And this is a powerful tool of Seeking Alpha where you can compare these two. And let's just go to year to date, because year to date, Toyota's up 25%. Toyota's up 25%. Tesla is down 42%. Clear as day. Let's look at 1 year. Toyota's up 70%. Tesla's down 12%. You go to 3 year, Tesla's down 40%, Toyota's up 48%. So again, timing matters. You go to 5 years, and look, Tesla's up 719%, Toyota's only up 85%. So if you're buy and hold person for 5 years or longer, like Kathy Woods is, Tesla makes sense. If you're somebody who doesn't trust Tesla and thinks that they have a lot of dilemmas in the short term, you're better off trading this stock. Now, how do you trade? Well, you go into my 4-hour algorithm on this one. Tesla over 2 years. Again, this is a 2-year back-tested strategy. you make 62% in my 4-hour algorithm. 62%. 23 positions over 24 months. Not even once a month you trade. And it gets you in an average win 18%. What do you get if you bought it 2 years ago and you held it? You're down 57%. This is how you trade it. 4-hour algorithm, proven, back-tested strategy. Doesn't mean you're going to make money going forward, but it is a back-tested strategy that you can use to trade Tesla. Now, it got you in here at 172, got you out at about 161. So it saved you this huge downturn. What are we going to see tonight? Remains to be seen. I don't necessarily like it, but I did enjoy that podcast from Steve. Another tool that I use, Seeking Alpha, we can look at yesterday. Ford, in fact, was up 6%. United Airlines, 4%. NVIDIA, these are the top movers. You can scroll through. I'll post a screenshot because I sit in bed at 5:30 in the morning when I wake up, and I scroll through the Seeking Alpha, the app on my phone. I absolutely love that app. It provides me so many good things, and I'll include the screenshots of the stock gainers yesterday. You can find today's movers. Look at Cardinal Health, CAH. They had news about something with United Healthcare. I forget what it is. This is an alpha pick. What is it doing today? It's even. We had an entry here at 108. I'd wait for the MACD to cross up again. But you have earnings coming up May 1st on this one. This is an alpha pick. This is a buy and hold. So you want to take a look at these big winners and losers because the winners typically will pull back. The losers may actually gain. I wouldn't trust GameStop, but I'll include these things. There's also top-rated dividend aristocrats. This top one, you should own one of these, at least one. PG, Cat. I've owned Cat. I got rid of it. I do own Target. I do own Coke, Pepsi, and I own Coke. So I own 3 of these top 10. Here's another one. These are the aristocrats, the champions, the yield rate. Look at this. RTX, 2.32%. New Jersey Resources Corporation, probably a REIT. Realty, 5%. Realty Income Corp. That's a quant rating of 4.0. That's not bad. If we want to look at O, let's go and look at O on the 4-hour algorithm. It's got a range. You're getting 5%, but you're putting in this range. Not a bad one. In fact, your monthly dividend is coming up April 30th on O. 5%. You're not getting 5%, by the way, on that one. Now, my algorithm performs really well. You get in at 52.91. You lose 1%, but you're making 5% on the dividend. So while you're sitting here at 50 and you're waiting for this one to recover, because make no mistake, it needs to recover. This 200 days moving positive, the 50 days still moving negative. So long term, you're still kind of got maybe a downturn on this one, but there's a lot of people holding above this in the 60s. That's going to pull this stock up. Again, if it's valued correctly, it's going to pull it up. So take a look at this. I mean, this is what's great about the Seeking Alpha homepage is not only do you get commercial free and ad free look at all of the news, but you get these great ideas. And again, if you want to sign up for Seeking Alpha Premium, right here, 20% off. It's $189 for the year. I absolutely love it. There's 2 tools that I absolutely love. There is Seeking Alpha Premium where you get the quant. You don't get the alpha picks, but you get the quant. And you get a Trendspider. And Trendspider's having a sale right now, by the way. Sale is $639 for the year. That's $53 per month. If you can't make $53 per month off of my 4-hour algorithm, you're not trading with a large enough portfolio value, and that's the key. Or you're just making bad decisions. That's it. I mean, again, the algorithm isn't going to make the decisions for you. It provides you a tool to be able to make better decisions. And for $639 a year, I manage my multi-million-dollar portfolio using those 2 tools. And I use alpha picks to tell me, okay, what are really good stocks? What's a recent alpha pick? GCT. That was just on the 15th. So 7 days ago, GCT was picked. Okay? This one has been a monster. What are you up? 2% in 7 days. Yesterday, it was up 6% to 37. Did you buy it? Because last week, I told you in the newsletter I said I bought a bunch of this one, and I let people know exactly what it was. I didn't tell you on the day that I bought it, but I told you a couple days afterwards where it was trading at 32, 33, 34. The newsletter's free. I don't know why you don't sign up. We can look at GCT in the 4-hour algorithm. It gave you a buy at 30. Now, this one on a back-tested strategy makes you 349% on a back-tested strategy. This is the 4-hour. 2 years ago, if you had bought this 20 months, because it was an IPO, so 20 months, you're up 349%. Your average win, 47%. I put about 12 grand into this. This is the day that it was picked on the Alpha Picks portfolio. Doesn't mean that you're not going to go down. We've seen other ones like Okta, Twilio. We've seen Twilio go down when they picked it. It's long-term. Again, this is a long-term strategy. Alpha picks 2 data-driven stocks each month that provide you a long buy and hold strategy. They alert you when to sell. This is the difference. They alert you when to sell. So that, on the 10th of the month where they're going to trim SMCI, and they did trim SMCI before that 22% drop, they absolutely did. If you go over here and you look and we go to Alpha Picks, they trimmed SMCI. Bulk up your stock portfolio. Alpha Picks portfolio review. They went over trimming SMCI on April 10th, and they went over trimming it. So you've got to mitigate the concentration risk. March 19th, they said trim SMCI. That's what they said. Now, if you followed that, you're doing really well. And this is why Alpha Picks is up 130% versus the S&P up 37%. So if you want the tools, there's the tools. It's Trendspider, it's Seeking Alpha Premium, and it's Alpha Picks. That's all I'm going to give you. Just the tools. But again, GCT, big one. I saw this article in Seeking Alpha. Schwab and Netflix post earnings. Both stocks still well off of all-time highs. So if we look at Netflix, which is in the core portfolio, this is one that I own. I thought it was a good buy here at 660. I think it's a better buy here at 554. And the reason? Because they didn't change anything other than, hey, we're not going to provide Wall Street the additional data. They didn't provide any kind of guidance. Hey, we're going to crash. They didn't say, hey, we're going to go back to, this time period in January 2022 where we're not going to make enough money, where we're coming off the pandemic and our subscribers aren't going to grow. No, they're continuing to crack down on their passwords. They're continuing to expand with WWE Raw, all of that stuff, live sports. They're doing sports in a smart way. They may get NBA. They may partner with somebody to actually do additional live sports. Again, they're 47%. Look at that. When I noted this one down here at 486, am I going to buy? I am going to buy again. I am going to buy again in the 4-hour. The buying and holding makes you 161%. The 4-hour makes you 54%. Now, it got you out here with a 3% loss right before earnings. I said be careful. We're down. We're using that 200-day. You've got some divergence here with the downward mobility into earnings. I do think you continue your move up. So this article points out Schwab and Netflix. Schwab, all of these earnings are behind you. So this isn't something where you're trading the earnings. This is something where you're putting in for a positive momentum. Schwab, the 4-hour algorithm makes you 48%. Versus 4.9% buy and hold. That's over 24 months, 23 positions. So it's once per month. It's not like you're in and out of this thing all the time, but you've got an upward trending 50-day and upward trending 200-day. You haven't participated in this back because financials are strong, and this one is strong. Now, when you go to the weekly, I said this before, you've still got 20-something% up to its all-time high. It may provide some resistance there, but that's where you're going. So I like both of those. Read this article. Again, I think those two are two of the top ones. Top high growth investment ratios from each sector, Goldman Sachs. I saw this because I got an alert from one of these apps that I have, and I don't know which one it was. It says Amazon stock could jump 26%. Goldman Sachs expects an earnings beat from Amazon next week and says its share price could jump past its all-time high. And so I found this one, and this is great. Top high sector growth investment ratios from Goldman Sachs. I'm going to put that article in. I'm not going to put the alert in for Amazon, but I am going to show you Amazon. And I've said this before, Amazon under 180, just buy it. Now that 188, we can see that 188 pushed it down. It provided some resistance. Your MACD quickly fell down. You don't have a buy in the algorithm. The algorithm got you out with a 2% gain right there. Now, over 2 years, you've made 30% in the 4-hour algorithm. The buy and hold, 22%. I continue to say you buy and hold this one. Don't trade it. You buy and hold this one. I added a bunch back in July, way down. It was down. I was way down on my buy in July. It didn't look good. Now it looks great. Now I look like a freaking genius when I bought in July. I was up here at about 136. It went way down. I added more. And you just continue to add to this one. But when we look at that 188, it is the all-time high right here. Provided resistance here in July 2021. Provided resistance in November 2021. Then you saw the big slide. And you never recovered from that big slide until you do. And you're back here. And Goldman Sachs says it's going to go above that all-time high. It's still a little bit hot. But 178 right now, if you don't have Amazon, I would do it. If you haven't used Meta's AI, by the way, go and use it. Just go to Facebook, go to Instagram, go to WhatsApp, and use Meta's AI. It's impressive. It's fast. I mean, it's one of the fastest to actually do image creation. Just type in, dogs playing poker. Type in cats running over a fence. You can animate this stuff and it comes back incredibly quick. It's open source. AI, remember, we're in an AI and GLP-1 market, and that's going to win. Meta's earnings are coming up on Thursday. I think this one looks weak into earnings. I don't think this one's horrible. I think this one might actually be a good one. And Steve talked about it on his podcast yesterday with the Great Seven. He said this one, it's a little bit of an issue on the valuation as far as the 32, the PE goes. But he points out the gap, the forward gap. You're trading 20% below the sector median of 1.35. And that's again, if Meta in a year, there's two things going for Meta. There's the TikTok ban, which should push it over 500. You're trading at 488 right now. You're up 1.5% in pre-market. Everything's in A. So again, if you haven't used that AI, I would push you to use that AI. Remember, Anthropic is now one of the biggest AI models, and that's big for Amazon. So Amazon, Meta, I think those are the two buys. Microsoft is the other one. I put $100,000 in Microsoft. They unveiled a smaller AI model, Pi 3 mini report. This is big. This goes right against Apple, which is trying to put it onto phones. This could be huge. Available immediately on its cloud service, Azure's AI model catalog, machine learning platform, Hugging Face, and a framework for models. Again, we're in an AI market. What are the biggest movers of today? Novartis rose 5% after topping expectations. Nucor, I wanted to point out Nucor, which is one of Jim Cramer's investment clubs. This is one of his biggest holdings, down 7%. Is he going to have the CEO on and cry? I think Jim's going to cry tonight off of this one. I think that one's an interesting. Lulu. Have we pulled down our pants enough? Lulu's interesting. Again, the COVID low with the VWAP. Lulu's trading right at that. And let me point this out. This is interesting. This is the anchored VWAP anchored against the COVID low. You've pulled that back to that. Is this the bottom for Lulu? Well, let's take a look at the 4-hour algorithm. The 4-hour algorithm has you in here 360. You've got the MACD crossing up. You've got an RSI that quickly went to 53. You've got an earnings gap right here between 418 and 474. That's a juicy gap to get up from 361. Now, if we go over to Seeking Alpha and we look at Lulu, it's going to be a D minus on the valuation. But look at the peg. It's a C. It's not crazy. The valuation's a little bit crazy, But again, you go into the mall and you take a look at the mall, and there's two stores. There's Apple and Lulu, and they're both packed. You look at Wall Street, 465 with a 28% upside, 28% update. 37 analysts in the last 90 days have looked at it. 18 have a strong buy for it. You know, you look at the revisions, look at that. It's come down a little bit, but when it trades this far off of its value target price, it typically comes back. So where do we find the bottom? Again, you're trading right at about that time when the algorithm got you in. The algorithm never got you out. I think that one's interesting. It's an interesting one. If you want to take a look at Google, pretty interesting how resilient Google has been despite this month's broad market pullback. Look at this. This is the monthly chart. Google's been doing really well. You got that nice cup. Is the handle coming up? I don't know. Is that going to push higher? We can take a look at Google. I've said anything under 150, great buy. It's at 158 right now. I like the way Sundar Pichai, I think that's his name, is using the culture at Google and pushing them forward. Again, I own a bunch of this. I own a bunch of this lower. I put this 150 price point in there. You're kind of, look at the monthly. Look at the monthly or the weekly. Again, in this market where we've been going down, Google has held up incredibly well. Yeah, it's going to take a catalyst to get above 150, but the catalyst was that email that said, hey, you people who are disrupting work, don't disrupt work anymore. I thought that was a great one. I thought that was a mover. Roblox pops on the back of JB Morgan upgrade. I have said this before. This is in the core portfolio because when this one dips under 40, you want to buy it. It's at 36. 36. We went over this before, how it's below this range. Did you want to buy it? Well, today it's probably going to get a buy in the algorithm. The algorithm loses you 10%. Buying and holding makes you 4% over 24 months. You don't want to trade this on the algorithm, but what you want to do is you want to buy it under 40 and trade it over 40. That's what you want to do. And so when I said this, it's going back over 40. You can buy it today at 36. It's going back over 40. If you buy it today, read this article. Read this article because in the quant, it's a sell. And it's a sell in the quant because of the valuation and profitability. Now, when we look at the valuation of this, the peg, they don't have a peg. So it's a company that's not making money and you're banking on the future. So you don't want to buy and hold this. You want to trade this under 40 and sell it over 40. Cleveland Cliffs, we talked about it yesterday. They missed. They announced a record buyback. There were a lot of positive things in the earnings report. It's down 3%. Buy it under 20. It will go over 20 again. Buy it under 20. It will go over 20 again. If we go back and we look at the weekly and we go to the pre-COVID stuff, this was trading at $7. This one trades regularly between 13 and 22. If you buy it under 20, it will go over 20. It will. So let's talk about earnings. UPS, they had mixed results. But they reaffirmed guidance. And this one, they reaffirmed guidance. Could this be a comeback for them? We got a cross up at 144. You're trading at 145.34. This might be not a bad one to bet on the comeback here. I don't know that I'd necessarily do it 100%. You had that death cross. I'm not a big UPS guy, but if you believe, in what Brown can do for you, go with UPS. Take a look at that one. Pepsi beat. Revenue beat. It's down. I think it's down. It just wasn't good enough. It's 0.32. We've talked about this one having that range that it's trading in. Look at how strong it was going into earnings. It's down on 175. Again, you had that golden cross back there. Nice move. I own this one. I don't trade this one. GE, they're beat. Revenue beat. Again, it was a huge win. If we go and we look at GE is up, let's see, they're up 4% in pre-market. This was their first earnings after splitting out those three companies. And we can take a look at the weekly. Because if we look at this weekly, you'll see how strong GE is. GE just crazy, crazy strong. I mean, look at that move. And you're back. You know, if you bought this in 2017, you've held on. I mean, hold on for the ride. That's how long this one has been through the mill. If you bought back here in May 2020 at 29, 4 years ago, fantastic return. Timing matters. GE Space. General Motors, they beat by a lot. And bottom line estimates, they raised their outlooks. GM, we can talk about GM. We can talk about Toyota versus Tesla. We can talk about Ford versus Tesla. GM versus Tesla. GM is currently in a run. They are up 5% at 45.56. This one's probably going back to 50. I mean, again, I'm not buying this one. I'm not a big GM fan. Look at that MACD, low, crossed up. Algorithm got you in at 43.25 yesterday. If you had, say you were a GE fan, and you had it on your watch list, and you had an alert in Trendspider. Yesterday you bought it at 43. Today you're at 45. You're up 5% today. That's a great, great price. Now, the algorithm makes you 17% over 24 months. You only make 7% if you bought and held. It's 32 positions. This one's a volatile one. You lost on this one going down, but you've made 17% on the way up. So, that's my dad. Hold on. I gotta see if he needs anything. Sorry, I had to take a tech call from my parents. That was the Apple Genius bar. It's called with Gary. Yeah, there was a change setting. I have no idea where I was. GM, if you want to buy GM, they upped their stuff. I'm not a big fan of GM. If you want to buy, I think it's going to 50. Next one, Spotify. They reported Q1 results. What I found interesting was the monthly active users grew by 19% year over year. That's huge. And I think it's up about 5%. Now, Spotify is one that I held before. I don't think I have any shares right now, but we've seen this nice little pullback. Now, Spotify in the algorithm makes you 53%. Buying and holding 2 years ago makes you 147%. So again, it's one that you can usually buy and be fairly safe with the algorithm. Again, 53%, that's huge. Their earnings were pretty big. If we go and we look at this weekly, you can see the big move that we've had. Now, their all-time high, way back here, 387. Are you at 387? No. If we go over here and we look at Spotify and the quant, it's a hold. Why is it a hold? We can take a look at it. It's the valuation. The valuation's a D, the profitability C. They increase their profitability. This might change from a hold maybe to a buy. They don't have growth factor in here. It's 4 out of 36 in communication services. Number 1 is TME, that's Tencent. Number 2 is IQ. 3 is IMAX. 4 Spot. Disney, and then Netflix. Netflix is down here at 6. So I own Netflix. I own Disney. I do not own Spotify. I probably should own Spotify. It's up 10% in pre-market to 302. This is going to continue to move. Look at the weekly. You just got your golden cross. Spotify, I use Spotify for this podcast. I love it. Today we have 2 earnings that are of note. First is Visa, and Visa is a Motley Fool pick. This is a top Motley Fool pick. If you want to take a look at Visa and MasterCard, we can take a look at this article. Visa and MasterCard earnings expected to rise in seasonally weakest volume quarter. Overall consumer spending, the engine of the U.S. economic growth, remains strong. And they talk about Visa and MasterCard. Visa will release earnings fiscal 2024 on Tuesday after the arrival. Visa is expected to post a non-GAAP earnings per share of $2.43 in the quarter. If we go and look at Visa and we go and look at the expectations, we can go and look at earnings over here. And again, this is how you use Seeking Alpha Premium. Go and look at the earnings. We're looking at a slight increase and continued increase. So if they continue to guide higher, we should see this stock move. Now, how does this chart look? This chart looks weak into earnings, but the algorithm gives you a buy here at 272.44. Trading at 274.25. So it's down slightly. It's up 0.71. Look at how low that MACD is. Look at how the RSI is just sitting here. It's waiting for a catalyst one way or the other. maybe what you want to do is you want to wait until the earnings actually come out and then take a look at it and say, because here on the weekly, we may still have downside, but the RSI has quickly moved down to 56 to no man's land. So I like that one. Tesla, I don't like. Go and listen to Steve's podcast on it. It's 143 right now. It's up 1%. I don't know what Elon Musk is going to say that's going to take this one out. The valuation is crazy. If we go in, we look at Tesla here, the valuation is absolutely nuts on this one. It is just going to be more about, what they're going to do and what their plans are. I don't understand their pricing structure. It's out of control. Their pricing has changed over the week about 6 different times. They just undercut the price of full self-driving down from $12,000 to $8,000. This is a company whose valuation is F. This is a company whose forward gap, even with growth, is trading at 6.19. The sector median is 1.45. You're trading 326%. The only valuation that's under 100% above where the sector's trading is the PE. The trailing 12 months based on gap. That's at 33, and that's 92% above where the sector's trading. It's in consumer discretionary, so it's not valued as a tech company, even though it should. It's number one in this one? GCT, which I just went over. Buy GCT, don't buy Tesla. There will be a time to buy Tesla, and I tell you, I would think it's moving more towards 100 than it is to 200. You're right at 142. I would say 100 is more likely than 200. Will it get below 100? I don't know. Now, SCHW. So market manipulation explains SMCI dropped last Friday because no pre-announcement and a 20% plus haircut feels completely shady on all parties involved. No, it's not shady. It was a news report. There was a news report and it came out from Wells Fargo and it was a note. I don't think there's anything shady about it. I think they were just making an observation and the market took it as, hey, we're going to take our profits. There was news. It was a catalyst, Shep. I don't think this is market manipulation at all. If it is market manipulation and earnings come in really good, boy, somebody got benefit of buying that dip. Now you're at 717. Where am I buying? I'm waiting till the algorithm tells me to buy. The MACD is still down here. There is no buy currently in sight, but the RSI is down at 26. I would say anything in the sixes, I think you want to start adding to. That is right where the 200-day is. Now, if we look at the weekly chart, you still got very high number here on the MACD. It's still super high. Remember, if you bought this just January 1st, say you bought this January 1st, okay? We're going to go back to January. This is November. This is January. Here's the first week in January. And it was trading at 280. Okay, we're going to go down to 280 here. You are up, just from the beginning of the year, 156%. Great. You were up 230%. But here you're up at 153%. You have a lot more room to go down. I don't think there's anything shady about it, Shep. I think it's just this is a stock that has moved a lot, and people said, I want to take some profits. There's some news, and I want to take some profits. Gavin Gensler, hey there, new to the podcast. I love your insight and news. Can you take a look at the ticker URI? Sorry, Doug was crying. URI, this is United Rentals. This has been a solid mover. Gavin, I think, again, 4 hour, the algorithm makes you 91%. Buying and holding makes you 98%. You have a 41% win. Algorithm has you out right now, but I'd say you're using that 200-day as support. I think you're going to come back up. The earnings are April 24th, which is tomorrow. We can take a look. Look at the weekly. Again, the weekly, this is kind of typical where the chart is just super high because we've taken off. And this is one that has taken off. If we go and we look at United Rentals in the quant, in Seeking Alpha, it's a buy. The valuation C-. It's ranked 4 out of 43. 1 year, you're up 64%. So if you take a look at this valuation, you really want to look at that with something like this. Look at the PEG. Again, this is Steve Kress's favorite indicator, 1.36. That's 16% below the sector. So do you have more room to run? Well, if you take a look at this, the all-time high here on the weekly looks like about 724, 729, 729. Probably not a bad move if you have good earnings. Again, it's United Rentals, and if we take a look at this and we take a look at, let's see where the Wall Street expects it. It's got an 8% upside. Average price target 683, but it hit that 740. So you look at this one, the price target's continuing to move up. It's trading below its price target. Traditionally, it's held it pretty closely. And when it's under it, you could buy it and it's just continued to go up. I don't think it's a bad one, Gavin. Does United Rentals make me excited? No, it doesn't. I mean, it really doesn't. When you take a look at the 43 trading companies and distributors stock, DXP, GMS, nothing really gets me excited about this stuff. I think we're in an AI market, but if you want something that's going to return something pretty solid and pretty consistent, I mean, look at the revisions. If you look at these revisions, in the last 3 months, 90 days, 11 earnings revisions up, 8 revisions down, revenue up 17, 2 of them down. So overall, they're pretty bullish on this stock, I would say. But again, you're heading into earnings. Algorithm has you out, but the algorithm underperforms just by a little bit. But I think it protects you. And if you wanted this looks weak. I mean, that just looks weak heading into earnings. The 50 days moving down, the 200 days still positive. I think you're going to use it as support. And I think your RSI is low enough. I just wait for that MACD to cross up. I just don't think the MACD is going to cross up before earnings. So if you're sitting there holding it, you're fine. If you want to buy into it, I'd just wait into earnings. But again, this isn't one that, I'm super excited about. I think it's going to continue to go up. It's just one Disembodiment from Reddit. Why such little discussion on VRT? The stock has treated me very well. Reason is nobody asks about it, and I don't know anything about it. VRT, it's been a solid mover. I mean, that chart looks really good. Weakness right here, 22% gain in the algorithm. Algorithm makes you 252%. You make 544% over 24 months. If we go over here to VRT in Seeking Alpha and we look at VRT and we look at the summary right here, it's a strong buy from Wall Street. It's a hold from the quant. Why is it a hold from the quant? It's the valuation. But the favorite factor is PEG. It's trading at 0.55, which is significantly below 66% against the sector median. It's ranked 7 out of 69. Now, what's number one? Powell. Powell is an alpha pick. So I don't think there's anything against VRT. Why is there no discussion about it? I just haven't heard about it. But VRT, solid. Looks good. Kyle Myers, can you share your thoughts on Chipotle with earnings coming up and the 50-for-1 stock split? Chipotle's one that's interesting. I don't particularly like the flavored rice that they have. I've talked about this before. I hate the flavored rice. I'm not a fan of an $18 burrito. Other people are. I mean, again, they cook their fresh food. There is nothing secret about this one. They pay their workers well. They have tremendous lines, and people seem to like this. And I don't. I just don't like their rice. And so I can't go into Chipotle saying, oh my God, this is the best $18 burrito I've ever had in my life. Valuation is an F. It's a hold in the quant. The valuation, if you look at the PEG, how they're growing, they're 81% above their sector median. There is no reason to think that they are going to continue to grow. Now, when we look at their earnings, are we looking at an increase in earnings? Yes. You've got super high bar here. You've got an incredible, one to go up here. That is it. But you can't argue with the performance of the stock. In 1 year, you're up 60%. Year to date, you're up 26%. If we go and we look at Wall Street says it's a buy. It's trading at 2,917. I'm sorry, the 2,947, 2% upside to the actual target. If you look at the price target, it's kind of held it. It's not, crazy. But over the last, let's go over to revisions. It's a B plus because 23 earnings per share revisions up, 10 down. Revenue up 24, 6 down. So positive, earnings revisions. If you go to the summary again, it's just a hold in the quant. It's ranked 12 out of 44 in the consumer discretionary. What's number one? EAT. That is an alpha pick, EAT. So I think, again, the 50 for 1 means nothing other than people are going to buy it up. And I don't know that they're necessarily going to buy it up on that 50 for 1, but 50 for 1 means nothing. Remember, a stock split does nothing to the value of a company. All it does is make it easier for people to buy it at a cheaper price. It doesn't do anything to the valuation. So a $100 stock that splits 2 for 1 and is trading at 50, it's still a $100 stock because you just have to, but you're only buying a half a share. So it does nothing to the valuation. With current ability to buy fractional shares, a split means nothing. A split used to mean a lot because you used to have to buy full shares of stocks. You couldn't get partial shares of stock. Right now, everybody, except for freaking Schwab, I guess, allows you to buy fractional shares of stock. So do I think it does anything? No. Do I think it will do anything to the psyche? Yeah, I think it will. Scans. Let's go and look at some scans. This is the part of the podcast where I go over my 4-hour algorithm and tell you where we have entries, which means we're bullish. Walmart, $60. Buy it under 60. It's trading at 60.28. If you want to buy this one, just buy it. It's a perfectly well-priced stock. I like Target. Simon Property Group. This is one that's had a pullback. It's up 0.73. Again, we're up in pre-market. Everything's green here. 142, you're under the 200-day. Is this going to use the 200-day as resistance? I don't think so. This one, Simon Property Group, nice 5% dividend. If you look at the weekly, we've held the 200-day and the 50. They're still moving positive. Have you hit your all-time highs? No, your all-time highs, 213 way back here in 2016. That means nothing. Means nothing. The MACD is still high. The RSI is hanging out in no man's land at 53. JEPI, DJI, EQT, DRN, XLRE is an interesting one. This is a spider sector, XLRE. This is the real estate. And I thought this chart was interesting because you can see it's just kind of hovered around. Now, on this 4-hour, it 36.17 is the buy-in. Here's the key. The 4-hour algorithm makes you 16.3%, okay, over 2 years. That's not bad. 16.3. You lose 27%. It protects you 27% over the last 2 years. You lose if you're investing in the real estate sector. This has been a super volatile one. The algorithm protects you 16.3%. It protects you. It does that middle ground. And if we're talking about the middle ground here, you just had this death cross, but you got a nice gap up here. And if you're starting to see the confirmation here, if you look at the weekly on this XLRE, you can see we're using that 200-day as resistance. So if you buy it here at 36, I would say sell it before you get to 40. And then you can buy it if it goes above that 40. If you want to get it, if it goes to 46, you can sell it at 40 and then buy it back at 41. There's nothing against that. MHO, which is this is part of the look. The MHO is part of the alpha picks. This is one at 112. This is one of their biggest winners, MHO. Duolingo, which is in our watch list, Duolingo has a buy. We just got a question about that one yesterday, I think. Duolingo, it's not a bad one. It's at 204. You look at this one on a weekly basis. This has been a solid mover, Duolingo. I think the valuation is what's bad. Zoom is an interesting one. This one has a cross up. ZM is the symbol here. ZM. We look at the weekly and it's just weak, but 59.70. Hold on 1 second. Hey. No ma'am. Hey, let's shut it down. Penny, I don't want to hear from you. No. You're both setting each other off. So let's look at Zoom. Sorry. I know it's a long podcast. That's one of the benefits of listening this long is the dogs never stay quiet for that long. Uber. I'm sorry, this is Zoom. Zoom is an interesting one, 59.70. I think this one goes back into the 60s. You had the death cross here. You couldn't hold the 200-day. This one's an interesting one. If we go into Seeking Alpha and we look at the quant on Zoom, it's not valued out of the realm of possibility. The problem is the growth and the momentum, C-. But the valuation's not great. It's a buy. Again, 1 year, you're down 9%. Year to date, you're down 16%. I like this one. We got pins. Now, here's what CTSH. This is, let's see. I thought this was an interesting chart. This is Cognizant. And I thought this was an interesting chart for a turnaround. 68.29. Now, I'm not into this company. I'm not looking at anything other than chart. But I thought this was interesting. 68.29. As a buy right there, because if we look at the weekly, you've got a clear trading range here. Now you're just getting under the 200-day, but that 50-day is starting to move positive. And if it were to have a golden cross, you can see how it performed on this golden cross. It kept moving down, but ultimately, if you bought here at 78 about 76 when it had that golden cross, you rode it all the way to 91. So it's an interesting one. There were some ETFs with low-cost ETFs. Bitcoin, almost everything. So if you want to see the list of all of the scans, you go over here to the podcast, or I'm sorry, the newsletter, dailystockpick.substack.com. Click on the latest episode. You can scroll down. By the way, there is a Zoom call today at 4 o'clock for everybody with Seeking Alpha on how their quant stuff goes. But you scroll down here to the bottom and you'll see the scans. If you want me to look at a chart, just comment on the new newsletter. Hey, I want you to look at this chart. I'm putting all these scans in. There are a ton of scans. Again, we're moving positive. Do we hold up through this day? Because you're up 0.54% on the Qs. But do we hold it? Again, the key is if we hold this, we have confirmation, and you might be moving again above this 200-day. And again, the 200-day is moving positive. The 50-day is moving down. But we are in an oversold territory, and things start to move. If you have any questions, hit me up. Remember, there's 3 tools. Everything that you need is here on the Linktree, linktr.ee/dailystockpick. Get the 3 tools that you really need. And that's Trendspider, Seeking Alpha, and Alpha Picks. All 3 of these are linked on the Linktree with specials. You get $50 off of Alpha Picks. You get $50 off of Seeking Alpha Premium. You get, $1,748 in your first year off of Trendspider. $1,748 savings off your first year in Trendspider. It is by far, you've seen how the algorithm performs on everything. It's just one of the best tools that they have. And again, I manage my personal portfolio with this. If you have any questions, hit me up. See you tomorrow after Tesla.
Every
Bye.
morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.